Good morning, it's Jeffrey Cohen. It's Tuesday, August 23rd. I'm an investment advisor's representative with the U.S. Advanced Computing Infrastructures, Inc., which is an owner of a registered investment advisor in Illinois. We run Chicago Quantum as our brand. You can find us on Twitter. You can find us now on YouTube. Please hit the subscribe button if you like the videos. We're not paid to make the videos. We're paid to run models for clients, code and run models, some of which run on quantum computers from D-Wave Systems. And we're here to talk about the market. So it's such an interesting day yesterday. Yesterday, the markets fell. This is FinViz. You can see it here. NASDAQ down 2.5%. New highs to new lows, right? One new high for every 4.5 new lows. This was not a good day yesterday. Take a look, though. The market dropped dramatically in the first candle, in the first 15 minutes, and then was slightly lower. It was lower, but slightly lower for the rest of the day. You look at the S&P 500, pretty big drop, slightly lower, and then it actually, in these cases, they fell through lunchtime. So dropped in the morning, dropped at lunchtime, and didn't really recover throughout the day when you look at the market. So by the way, I'm starting off with gloom and doom, but then I'm going to get to the good news. And why am I wearing a Santa Claus hat comes later in the video, but you got to know. You need to know why I'm wearing a Santa Claus hat. This is crazy talk. I'm just telling you. You got to listen. So, it seems like everything was down yesterday. If we take a look at this and you say, okay, so where was the good news yesterday? Jeffrey, where was the good news yesterday? Well, alcohol and groceries. So we're going to eat our way through our sadness. Got it? I don't know who Albemarle and CF. I don't even know who they are. Is that Consolidate? No, that's like a tree company. Energy and P wasn't even really up. It was up a little bit. So drillers were up. Eli Lilly was up. I don't even know who Elvance Healthcare is. They must have been a merger or somebody. So nobody was up. Okay, oil and gas was up and alcohol sales were up. Okay, so I get that. It's a bad market. Start drinking, right? In my case, no. Love you to the moon and back. Make a commitment to your significant other. Tell them you love them and tell them everything's going to be okay. That's what you do when the market's bad. Go for a jog. Go play a video game with your wife. I went for a bike ride with my wife and my daughter. It was really nice. And I actually spoke with or texted with pretty much all my kids yesterday. It was nice. Because you worry, right? Like it's a down market. Everyone's nervous, right? Dad, what's happening? Jeff, what's going on? So let me tell you what's going on today. So yesterday, bad day. Oh, look at this. AMC was down 42%. By the way, just know what you're buying. I had somebody yesterday tell me something. Here, I want to show you something. There's a stock that I am short. Okay? I'm short the stock. HNRG. It doesn't mean you should short it, but I'm short it. This is an overpriced stock. It's a coal miner out of Terre Haute. It's a good company, and I really wish them well. I want them to be successful because they make coal in the Illinois basin, and they try really hard to help with like electric generation through coal-fired plants. They want to help people. They want to help like commercial clients. Think of like boilers and think of steam and think of all those important things for industries. Right? And so it's tough because they have to open up new mines. They have to open up strip mines. They're going to take over operations of an electric power plant. What do they know about an electric power plant? Except that it's a customer of theirs. But the customer shut down, and so they're taking over the plant. This sounds like an Ayn Rand story where like Hank Rearden is going to take over the ferry boats for the coal or for the iron ore, and he's going to go into copper, right? Rearden Copper and Rearden Metals and Rearden Life, but that's just a book. Okay? In real life, having to open up new coal mines and having to open up and operate a power plant with no money, it's really hard, and it's hard to lend to them because they lose money every day. They lose money on every ton of coal that they ship, and they lose it on volume, right? They don't make it up on volume. They just lose, big fat losers. And the only thing that keeps Hallador Energy in business right now is friends and family. They borrowed like $29 million. 4 out of the 5 lenders were directors or associate people with the company, and 4 of the 5 of them immediately converted their debt into equity and diluted the stock. And so while that's happening, you don't know that they're diluting the stock, and so you bid it up like crazy. You're like, yeah, I want to be all over this stock because suddenly they just found $29 million. But no, they diluted the stock, right? This is like a $4 stock, and it's trading close to $8. It's crazy talk. So somebody said to me, Jeff, there's people that just buy Hallador Energy just for a bet on the coal industry. They don't read the 10Q. They're not poring over management's comments in the earnings call. I said, but that's how we invest. I listened to the earnings call and the question and answer twice. I don't know. I just went back yesterday and reread the 10Q. They have mine safety violations. They had a fatality in their mine last quarter. A Marine, 2 tours in Iraq, and he died. He was pressed against rock, between rock and a drill, and he died. And he left 7 kids behind. And if the wife and 7 kids decide that they'd like some money from the mine, that's the money they don't have. They're self-insured for their equipment. I'm sure they're self-insured for their liability, right? I don't know. I'm just saying, like, you got to dig deep. If you're going to make an investment, you got to dig. You got to really understand it. I used to invest in SMLP, and I'll probably go back and do it again. I've made good money on SMLP now. But I don't have time to research them. I don't know what's going on. I really don't. And so I can't own the stock. I don't know enough. So that's my public service announcement to all of you. I hope you enjoyed that. I feel like I was on a lecture board, and I'm sorry. So let's get back to the markets. So what's going on, Jeff? What's happening, right? So you look at the indices. This is the futures on FinViz, and you see the futures are slightly, ever so slightly green. They're basically gray. They're not green, they're not red, they're just gray. And you see the VIX. FinViz seems to have a weird measurement for VIX, but we'll just look at the growth rate. At 25.50, it's up. It was 23.50 like Friday. And so, yeah, Yahoo Finance has a different score. And I don't buy the VIX, so I don't really know how to say it. But bonds are up, which means yields are down. So interest rates are down. Stocks are slightly up. The VIX, I don't know. It says the VIX is down. Great. The dollar, holy cow, Batman. We are at better than parity against the euro. I keep telling my wife we got to get that trip to Europe. I actually said that yesterday. Let's go buy tickets and let's go to Europe because I want coffee in Europe that doesn't cost $1.30 a euro or $1.20 a euro or $1.10 a euro. I want it to be at parity. I'm loving this. I love it. I want to travel to Europe. I got my Santa Claus hat. I'm ready to go. And the French love it when you show up and you do the whole American thing with packets of ketchup and you get Santa hat. You talk really loudly and you never say you're sorry and you never say excuse me. No, that's not how we do it. But Point is, there's going to be a lot of American tourists in Europe because Europe is screwed right now. They don't have energy security. That's part of the issue, right? Like they did this whole green energy thing. It's kind of like they drank the Biden Kool-Aid, but then Russia was like, well, then I'm going to invade your neighbor and maybe Poland next. And I would think Latvia, Lithuania, Estonia, the Baltics, gone, all Russian in like a year if the Europeans don't stand strong. So Europe's in trouble. That's why the dollar crashed. I'm sorry, the euro crashed against the dollar. And by the way, I'm glad to see the U.S. is maintaining its reserve currency status because the Japanese yen crashed and the Great British pound crashed and the Canadian dollar is crashing and the Swiss franc is down. Everything is down. The dollar is now the safe haven. The Aussie is down. Everything's down. Everything's down. The dollar is the safe haven. I love being an American to have the safe haven. It just means that our inflation and our imports will be a little cheaper, but it also means that we've got to save the rest of the world. I feel like the world's policeman again, and I don't know that I like it. It's fine, right? Copper, not really moving. So silver's down slightly, copper's up slightly. The real question here is, are we going to head into a recession or are we pulling out of our recession? I just don't know. I can't get a straight answer on recession right now. What I know is the dollar's stronger, but oil went up. So those don't go together. That's a contradiction. The dollar stronger means it should take fewer dollars to buy oil, but it's taking more dollars to buy oil. So oil is hella more expensive in these other countries, right? So let's go back to the original question. Yesterday, the market just had a shit day. I'm sorry for the language, but I really feel it. And this was all money. This was dark money right here. This is like money managers betting against the market. By the way, killed the Chicago Quantum Net Score picks. I mean, just flushed them down the toilet, down 5%, 3%, 2%. Now, the market was down 2%, so it's not... Actually, they didn't do that badly compared to the market. But wow, did they flush them early, right? So where are we at today? So I got good news for you. I got really good news for you. That's why I'm wearing a Santa Claus hat. Let me tell you what today has in store. Today's a good day. Looks like market's going to open much higher today. Where is my info for you? Here it is. Let's start with the money managers. So I say that the money managers are like a second order derivative of the market. Or just even a first order derivative of the market. Because if the market goes up, money managers have more money invested and get more fees. When markets go up, money managers make more transactions, more M&A, less restructuring, but these guys don't really do a lot of restructuring. But these guys will do more bonds, they'll do more acquisitions. They're good. The mergers. Oh, yeah, my stock's worth a lot. Hey, let's go buy another company. And right away, let's refresh the pause that refreshes. This is my view with the pre-market. And so this is ranked by market cap, at least the last time I updated it. And you see the larger caps are doing well. Now, T. Rowe Price is down, which, by the way, these guys pay a great dividend. So, like a T. Rowe Price, if you could buy it cheap, hang on to it. BX Blackstone at $102. That thing was that was in the 99s yesterday. That pays a nice dividend. 5% yield. Come on. What are you waiting for, right? So the money managers are up. There's hope. What else is up this morning? Crypto is up. So the physical miners are generally up, except for Rio Tinto and like steel. We follow steel. Nucor's down. But that could be an S&P 500 holdover. That might not. But like Cleveland Cliffs is up 0.5 point. U.S. Steel's up. Commercial Metals, Hecla, Core. Newmont made a recovery to 44. That's nice. But look at the Bitcoin, guys. Bitcoin's up. Not a ton. Because Bitcoin's at 21,500. But Bitcoin's up. Money managers are up. Let me guess. Retail? Talk to me, Jeffrey. Well, Flex Steel. I'm so disappointed to see that. I love these guys. I might have to buy a few shares just out of, like, pity. They make furniture with actual steel in it. This is like what my grandfather would have bought. I love this stuff. Come on, Flex Steel. They got good stuff, right? Expensive American-made furniture. Come on now. It's hard to get that stuff anymore. I mean, maybe I'll buy a chair. You know, I just bought a chair from Vietnam. But I have to cover it because I have cats and they're going to scratch up the leather. But I got a nice new chair. I earned it. I made some money on some trades. So, but you take a look and it's the risky ones that are up. So this is a bet on risk today. So risk is up. So what's going on, Jeffrey? What's going on is interest rates are down. US dollar is up against like all currencies that we track. Equities are set to open flat to up, but high risk is up bigly this morning pre-market. So people made money yesterday on the shorts and they're plowing it back into pre-market pain, into high risk crap. So Yahoo Finance will tell you the VIX is up to 23.67, but that's the closing price last night. They don't have the current. You see the futures are up just a little bit. But I'm going to keep taking you back to Party City. Not going to go bankrupt according to the market. Victoria's Secret. Bed Bath & Beyond. Big Five. Grow Generation. This is your risky stuff. Kohl's, right? That's a bankruptcy play. Hydrofarm. Hasn't made a profit in like forever. Carvana. So, yeah. So, high risk is good. High risk is good today. Let's look at cannabis and tobacco. It's always good for a laugh. High Tide is up 4.3%. So the risky stuff is up. Chips and semiconductors. I mean, one's down, the rest is up. So risk is up. Risk is up today. People are making outsized bets on risky. I'm working really hard not to show you any of our positions or not to draw attention to them. So pre-market on the banks, regional banks, you got 5 down. You got 10 up. The big banks are actually set to open higher. Yesterday, the big banks were set to open lower. But today, JP Morgan Chase, Citigroup, Bank of America, Wells Fargo, Huntington, U.S. Bank. So right now you have your top 5 banks. JP Morgan Chase, Wells Fargo, Bank of America, Citigroup, U.S. Bancorp. Top 5 U.S. banks all set to open higher pre-market. That's very bullish. Christmas coming in August. This morning, pre-market. So I don't know. Do I even need to look at anything else? Or do I just YOLO it on something? Something good. So that's not why you're listening. Although I will tell you that I YOLO'd it yesterday. Big. I took all the profits. So by the way, I made money yesterday. I'm going to talk to you about a trade I made yesterday. I'm going to walk you through it. No, I'm not. Call me. DM me. Get on Twitter. If you want to hear about the trade, I'm happy to share it. Get right on Twitter. Okay? We are Chicago Quantum. We are your investment advisor representative, especially if you live in Illinois and you're willing to spend some big bucks on some quantitative data analysis along with some fundamental to talk it out. And we'll do calls and it'd be great, right? I run the survey. You know, they're going to charge me again. I got to renew for another year on my data feeds. Super expensive. Give me a call. So here, I'm going to tell you, we made money yesterday on a short trade from Friday. And instead of buying more bling, we rolled it into a super risky bullish long bet with options. If it pays, wait for more bling. DM for details. Glad to share. And you can visit chicagoquantum.com for a brochure. If it pays, more bling. So I'm happy to share with you what's going on. It's crazy. It's crazy talk, right? I know it's crazy. You know it's crazy. Why would I roll over profit, money in my hand? I need that money, by the way. I got mouths to feed. And I rolled it into the riskiest bet that you could think of. The most disgusting, risky, long bet. Now, let's be honest. That long bet is based on about a year of model runs and deep analysis and reading the 10Q and looking in the chat rooms and looking at the stock and going again to valuations and going again to the news sources and then again to the 10Q and then trying to time it just right to buy that dip. So it's not just a YOLO. It was a YOLO. It's a crazy YOLO, by the way. But it's a YOLO based on top 5 banks, U.S. banks, are up today. They were all 5 down yesterday. Actually, it was more. They were all top 10. So, no, I'm not using correct grammar. Top 5 U.S. savings and loans are up today. The top 10 were all down yesterday. That's important to know. It's just a small thing, right? So crypto's up. Cannabis is up. What else is up? You got to know this stuff, right? A lot is up. Specialty furniture, retail is up. So let's look at computers and chips again. Well, that's interesting. Business to business is up. Except IBM. Could be specific. So not all business to business. Computers are up. What else we got? Trucking and transport. Well, that's interesting. Mixed. Trucking and transport and logistics is mixed. All right, I wonder if it's changing. I wonder if things are shifting. So let's go back. Money managers. Are we up? Pre-market? T. Rowe price is down. Everyone else kind of flat. Yeah, we're good. We're not great. It's not a bigly up, but it's a little up. Well, look, I'm not going to share with you our up run. I'm not going to share with you the leptocurtic stocks because that you should pay for. I'm not going to share our holdings because that's kind of self-promoting. Let's look at the walking wounded. Not every down stock is up. but a lot of down stocks are up. Indo is very interesting. Imperial Petroleum is very interesting. Qubits is very interesting. There's lots of interesting out there. Yeah, like AMC is up. Warner Brothers is up. Freeport McMoran, the copper guys are up. I mean, Atlassian is up. The Carlyle Group is up. Do you know they're not really down anyway? They've been trading right around a certain number. Just, it's interesting, right? So, there's some risky bets this morning. That's what I would say. Let's just go through the other stuff. There's a lot of other stuff to look at. So Summit, Midstream we talked about. That's just it's a great company. I need to get back in there. Hallador Energy is up 3.25% on 2 shares. Two shares. I want you to think about that for a minute. CBOE. Hallador Energy. 2 shares. CBOE is showing 0 shares. So what probably happened is somebody bought a few shares. Look at that. 758. They want to bet the farm. They want to sell the farm, baby. So let's go to NASDAQ Book Viewer. So I don't believe it, right? 2 shares doesn't make sense. Why would you do that? Why would you drive it up? So it's actually, buy is at 689, sell is at 786. That's a 97-cent spread. So, no, I'm not buying any hype that says Hallador Energy is up this morning 3% because it's a 97-cent spread. It's not going anywhere. Now, I will say let's take a look at the spider. 413.80 is about where it was yesterday, if I'm remembering my numbers right. And some big trades this morning. Big, hairy trades this morning. That's nice. And just because I'm curious, how are our friends at Verizon doing? It's got a big wall at 44. It's looking to protect. 44.42. 44.22. I'm sorry. So, and there's the S&P. So we'll keep track of that. And then we'll throw up one more good one. So what's really moving this morning? I don't know. We're going to take a look. So, AMC. Not AMS. AMS isn't going to move like ACM. My grandfather's going to, oh my God, 1067 on AMC. Can't look at that. You know what? Let's just be conservative. What's QQQ at this morning? Okay, 314.93, 413. So, we go back to FinViz. You see the market was down. You see crypto, 21,400. It was 21,500 yesterday. Forex, you see the dollar is still better than parity. Stocks are looking good this morning. VIX is down. Equities are up. Copper's up slightly. Almost 2 cents. Silver's down. We might have to play a little game with silver. SLV. The iShares Silver Trust. There might be a little inflation hedge there with some silver. I don't know. We're going to talk about that on another broadcast. So let's look at bonds. How did bonds do yesterday? What's interesting is the yield curve. It rose yesterday. It's not dramatic, though. It's a flat yield curve for the most part. And it's going to stay flat because if the Fed raises like policy rates, it's just going to flatten up that yield curve. That yield curve is not that exciting right now. Corporate securities, again, were down and actually pounded 10 to 1, 9.5, 9 to 1 low to high ratio. Pounded corporate debt. Pounded. corporate debt just pounded lower. And so there is fear in the market on corporate debt for already downtrodden companies. They're going to make it harder for them. They're going to make it harder to borrow, and they're going to make it more expensive. Now you know why we are short Hallador Energy. It is going to be more expensive for them to borrow money. It will. It will. They're going to pay. They're paying 8.5% now. I think it's 8% on their promissory notes. Such crap. Convertible promissories at 8%. You imagine if they went and took a bank loan? What would that be? 12%? Who pays 12% for money right now? I'm shivering. I can't take it. I honestly can't take it. I'm disgusted. Disgusted by the whole thing. But so debt's expensive right now. Debt's going to become more expensive. The spreads are going to widen, and interest rates are widening. So corporate debt traded lower for the lowest performing bond issues. New lows to new highs was like 9.5 to 1. This is terrible market breadth, and you should be thinking about it that if you have a crappy stock, companies that lose money will be less attractive as their borrowing costs rise. And this is irrespective of U.S. Treasury yields. Then add on rising U.S. Treasury yields, and we just put an incremental tranche of U.S. corporations into either slow growth mode or bankruptcy. It's what's going to happen, right? Credit is going to tighten. If yields rise too much. The banks can't afford it. See, that's the problem. The banks won't be able to afford to lend. And so profitable stocks, profitable companies. So Jeffrey, talk to me. Your model. I could share with you the top part. So our up run, the S&P 500 variance rose. It is now north of 1.7 times 10 to the negative 4. It's always been a little south of that. Market returns have been negative across the board for the past year. We've now seen that for months. So we're still down versus a year ago. The other thing that's important, well, we test our matrix with a Koleski decomposition. That's important. But that's not important if you're just looking at the stock market. So something that's important is there's 1,672 stocks that are listed that traded every day for a whole year, that are U.S. equities, non-preferred, not business development corps, not SPACs, real companies. 1,672. You know, that was like 1,400. My point is, there are more what we call money-losing companies with actively traded shares in the U.S. equity markets of NYSE American, and NASDAQ, all 5 exchanges, than ever before. The spider risk variance of adjusted daily price changes continues to rise. Now, for companies that make a profit, 2145, there are fewer companies that make a profit that have shares listed. Now it is more important than ever to be investing in profitable companies. But if we take a look at the risk of those profitable companies, it's 1.884 times 10 to the negative 4. Those stocks are seeing relatively lower risk than the spider. So the advantage of the S&P 500 index is diminished today, really over the past 3 months. This is important because it says that the benefits of passive investing through the S&P 500, the benefits are reduced versus investing in profitable companies. If you can and have the time and skills. Now's the time. It is becoming a stock picker's market. And the reason I say that is when you look at the variance of those 1,672 stocks all held evenly, it's 5.3 times 10 to the negative 4 versus 1.9. So it's 2.5. It's 2.5 times the risk. By the way, returns are up. Expected returns are up with that risk. This is not a bad time to be in the market. It's not. It's not a bad time to be in the market. Expected returns are higher today and this week than before. I mean, we tweaked some model assumptions, but those were tweaks. So what's happening is the riskiness of the market and the lack of a place to hide is driving up expected returns. If you're in the market now, you're expecting to make a killing. So interesting. You tie this all together, right? So now let's take a look at some other stuff. So we looked at corporate bonds yesterday. Terrible. Let's take a look at the futures again. Up slightly. Up slightly. So by the way, I have Corbis here. Corbis isn't really trading. They're just playing games in Corbis. They're playing games. Got Verizon. Hallador Energy's not really moving, not really trading. What else we got? What else is interesting? What's Tesla doing? 1 share and 5 shares, top of the market. It's just not liquid, not moving. What if we look at trending tickers? Intel continues to fall. So Intel has been a destroyer of market value for a very long time. And it continues to fall. Intel's down. Twitter's down. Bank of Nova Scotia. And then a bunch of stuff I never heard of. It's interesting. I'm just not seeing it. Not seeing anything worth talking about. So we look at the E-mini Russell futures. We look at the NASDAQ futures. We look at the S&P 500 futures. It's green. It's green in the morning. It's green early. We look at 5 days, and you see the market has been weak for 5 days. So equities have actually had a bad 5 days, right? It's not just one day. U.S. equities have had a downward trend for the past 5 days. Looking back, you're going to say, oh, the last 5 days, the market's down like 5%. I should probably take a picture of that. And I should probably toss it in the post. Because that, my friend, is a bad juju. So that says, yeah, the market's been dropping. So you're basically rekindling a bear market. Bear market is back. The bear market is back. The bear market is back. And the bear market rally is most likely going to run out of steam. But certain things have to happen, so it may not happen right away. And so pre-market's up. It's beautiful this morning. It's going to be a good day in the market. Pre-market. I don't care about that. I have to get rid of that. So the walking wounded. Remember we talked about, let's take a look at some other stocks. These are stocks that were down. We're going to take a last look at the money managers, and then we're going to blow through. Wow. American Shared Hospital Services is up this morning. So first off, that's crazy talk. Because that stock never trades. No, it's still not trading. 0 trades. Okay. It's stupid. It's not real. It's not real. Why would they say that, though? I don't know. It's not real. Someone's painting the tape. Oh, yeah. Paint that tape. What'd they trade, like 4 shares? 100 shares? Let's go take a look. How many shares do you trade on AMS this morning? Well, Jeffrey, it's $2 a share. I traded 4 shares. I invested $8. $8. Yeah. And it only cost me 50 cents, and I painted the tape. I painted the tape. No, I didn't. No, I never paint the tape. That would be illegal. 3 shares offered at $2.88. 100 shares offered at $2.12. I got to tell you, you want to paint the tape, you sell those shares for $2.12. Now the stock goes down 60 cents, and everyone's like, oh, Rome is burning. 100 shares. That's $212. So there's times you just don't believe it. For a thinly traded stock like that, you don't worry about it. Wrap it up. Just relax. What else we got? Stock market map we looked at. It was so red. It was so awful. Oh my God. We got Cisco down 2%. ServiceNow down. SAP down. I mean, this is business to business, baby. What's going on? Why is everything so red? IBM, Accenture, business to business services down in the dumps. Semiconductor yesterday was down. Google, Disney, Amazon, Tesla, Ford was down 5%. Oh my God. Okay, let's look at the news. Futures are flat. Intel is going to invest in Arizona chip factories. Okay, that's good. There's no news. I hate when that happens. There's no news. Oh, come on. Nazi warships? I just gotta look at that anyway. Pictures of Jupiter? Stuff about Twitter? China turning back to coal. You know, whatever we're doing for global warming, let's not Ukraine, I mean, what's going to happen in Ukraine? My guess is they're still fighting, right? So 12 minutes ago, be careful. Be especially careful. Okay. Daria Dugina. I'm actually really sorry that they killed Daria Dugina. She may have been a valid military target, though. She kind of had that Angelina Jolie look, from the video. It's great. The teeth from the movies. She's looking Angelina Jolie. She's all like, catsuit, and got the cute, with the breast coming out, and the little breastplate, and I got she's dancing around. Do. I kind of did the Hawaii 5-0 thing, when I saw the video of her. I was like, yeah, she's hot. She's a hottie, right? And they killed her. But she was probably doing something wrong. She was probably a bad lady, right? It's like The Smiths. Love that movie, by the way. That was a great movie. I might watch it today, just for the hell of it. So you see what Russia's done? Russia's taken all that land from Ukraine. And so I think what's going to happen is Ukraine is going to start attacking Russia with U.S. weapons and NATO weapons. They're going to start blowing shit up in Voronezh and Kursk and all over the place. Belgorod. And, the Russians are going to realize, oh, shit, we're going to keep invading Ukraine. They're going to invade us. And America's helping. And Germany's helping. And all the European countries are helping. Who knows, right? You could have American soldiers walking into Moscow and blowing up Red Square, for all I know. We had a president that called Putin a terrorist, like his first couple weeks in office. He's an animal. He's going after these guys. I don't know. We don't even have any news. You know what I mean? We have no news. Nothing going on. Oh, be especially careful. Here, I'll tweet that out. Let's everyone be especially careful. That there's no news. There we go. There's been crime. Defend your homes. I don't like it. I don't like crime. I don't like crime. Crime's bad. Crime is bad. So how are we doing with the treasuries? So 1 month treasuries are down. What they think that interest rates are going to fall. Right? 1 year treasuries are up, just slightly though. Look at that. It's pretty flat. It reminds me, drink more coffee. That's interesting. I wasn't expecting this. 10-year treasury notes are up. 30-year treasuries are up. So this is interesting, right? So this morning, in the last few minutes, long maturity U.S. treasuries are down with higher yields. Was not expecting that. That's interesting. That's something to watch out for. Mortgage-backed securities significantly weaker today. That's something to look out for. Yeah, I think it's time to go. I think it's time to get ready for the trades of the day. And so what I would say is this. You've got an interesting market, right? You know, silver's down slightly. Gold's down slightly. The futures are up slightly. Not a lot, but they're up. You've got interest rates volatile. Look at that. These are big changes in interest rates. Look at the month. Look at the month. These are big changes. And they're up today. You got no news worth even talking about. There's no news. You've got your economically sensitive, so 5 money managers down. Looks like about 10 or 12 up, but different ones up. Small ones are up, right? So maybe it's a shift. Maybe things are shifting. Regional banks. I mean, since we've been speaking, right? U.S. Bancorp, KeyBank, Bank of America, Huntington, J.P. Morgan, Citigroup, Wells, PNC. That's 8. Who am I missing? Well, the top 5 are up. So yeah, so it's more like the top 10 are up. So banks are up. Banks looking good this morning. I don't know how to read this. There's another dichotomy here, right? Which is, so Flex Steel is down pre-market. We're going to take a look at that. FLXS. Lots of retailers are up. All right. So let's it's not really trading. I would say economically sensitive stocks are up pre-market. The futures on U.S. equity indices are up slightly. Interest rates rose in the past few minutes. These are contradictory stories. Good luck in the market today. Good luck to all. All right. Whoop. Hope it updated. Sorry you have to see all this. It's crap. Welcome back, Jeffrey. Log today's insights. There it is. No. Uh-oh. Draft. Oh, I lost it. I hate that. August 23rd. Yesterday was down. What does today hold for U.S. markets? Boom. We're just going to have to post the rest of it later. We lost it. Stuff happens. It happens. Lost a lot of data, though, so it's a good thing you watched the video. Maybe we'll take a look at some stuff. We'll see what's trading, what's hot, what's happening. We'll start with the regionals, regional banks. So regional banks, pre-market, are up. The walking wounded, which are a group of stocks that are just tough to look at. 2 down, lots of them up. So lots of positivity in the market this morning. Money managers. 5 down, looks like 15 or 20 of them up. Specialty retail and furniture. Flex steel's down. There's like 6 or 8 down. Whole bunch of them are up. So market looks good in retail. Coal. 5 up, none down. Coal looks good. Crypto and physical miners. You got 4 physical miners or steel companies down, but you got the rest of them up. And some of those are a little bit memed. That's fine. Cannabis and tobacco. 2 down, lots up. Lots of risk money now. Chips and semiconductors. 4 down, lots up. But these are not up bigly. They're not blowing the barn doors off. They're just up a little. There's money out there being bet. 3 down on trucking and transport. 6 up. Yellow's up, which means gasoline's probably down. Let's take a look. Gasoline is down. Oh, see, things tie together. Gasoline's down. Trucking is up. All right. So it's flat. It's a stock picking market today. And we talked about the variances, and that's something to really pay attention to is at 5.3 times 10 to the negative 4 variance for down stocks or money losing stocks, all things being equal, versus 1.9 times 10 to the negative 4 for up stocks, means up stocks have significantly lower price risk, price movement. And compare that to the S&P variance of 1.7, and it's only 10% more risky to buy just a group of profitable stocks equally weighted versus buying a market cap weighted index. So if you were to look at profitable stocks and market cap weight them, I bet you they would be less risky than the S&P 500. All right, good luck in the markets today. Hopefully you made money, and we'll talk to you later. Bye-bye. And check us out on Twitter, Chicago Quantum, and go ahead and hit the subscribe button, please. Really helps us a lot. Really helps us. And drop a comment. We like that. And if you really like the video, share it on Twitter or LinkedIn or Facebook or Instagram or TikTok or somewhere. And just say, you know what? I watched this guy's video. He put on a Santa hat because he made money yesterday and he thinks the market's going up today. And we like it. So subscribe. We like this guy. It really helps me. What happens then is that YouTube shares my videos more and I get more views, and that makes me feel good. All right. You take care. Bye-bye now.